Good morning. Welcome to Stock Market Today, Wednesday, February 6th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Follow me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. And if you head over to chaikinanalytics.com/today, you can sign up to receive a free email. You'll be able to follow along with this show. Hits your inbox every day prior to the market open. U.S. equities were higher in Tuesday's trading, extending the week's gains. Consumer discretionary communication services and tech led. Financials, healthcare, and consumer staples were the only sectors to finish lower. Treasuries were mostly stronger, with the curve flattening. The dollar was stronger against sterling and the euro, but little changed on the yen cross. Gold finished pretty much unchanged. WTI crude down 1.6%. So your leading groups, discretionary, comm services, tech, and industrials. Financials, healthcare, staples, and utilities underperformed along with energy. And as we get to the desk this morning, S&P futures are down about 10 basis points after finishing higher for a fifth straight session. It was a quiet day in Asia with many markets still closed for a holiday, but Japan did move higher. European markets are mostly lower this morning. Treasuries are stronger with some curve steepening. Dollar is stronger on the euro cross, but weaker against the yen. Gold down 20 basis points, and WTI crude is off 70 basis points. And here we are at the S&P 500 at a key point. So we extended gains, and we're now testing that 200-day moving average. Support down below in the 2600 to 2625 zone that held up over the last time the market did give us a slight pullback. Resistance right now, near-term resistance is at that 200-day moving average, right around 2740. RSI moving higher still after breaking through that 60 level. Chaikin money flow remains bullish. It's intensely bullish, actually. So these are some of the strongest readings in money flow that we've seen in the past 12 months. So really what we're looking at here is a solid rally off the December lows, now meeting a key test in here at the 200-day moving average. Now, I will note that it is not a hard line in the sand. Look at previous instances where we broke through, faded, broke through, faded, broke through, faded. I'm not saying that's going to happen this time, but it is a key level to watch, especially in light of the fact that sentiment is no longer the tailwind that it was, and the market is, has not been able to really produce that momentum thrust just yet. As always, though, we're going to stick to the process of identifying the strongest stocks and the strongest parts of the market and buying those stocks when they become oversold. The reverse is true for the bearish side, names to avoid or maybe even open a bearish trade. Your market in a minute, the highlights from the note to Chaikin Analytics clients today. Stocks close higher to extend recent gains. Major markets are testing their long-term trend lines. That's something that we are looking at within Chaikin Analytics. And sentiment continues to move towards greed. Insurance, we'll take a look at insurance because it's a leading industry group of late. As a matter of fact, of the 21 groups that we look at, major industry groups within the sectors, insurance has been leadership for a while. Futures do point to a slightly lower open here this morning. From a power bar perspective on the major industry indices, the Dow still 3 bulls to 5 bears. S&P 500, 113 bulls, 88 bears. NASDAQ, nice outperformer yesterday, 28 bulls to 17 bears. Small caps, pretty much flat on the day, up less than 10 basis points. 458 bullish or very bullish stocks, 357 bearish or very bearish stocks. Uptick in bonds, comm services, nice outperformer yesterday, 4 bulls to 5 bears in that group. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain somewhat bullish, but the major markets remain mixed. That's due to the Dow here still being on a bearish ratio. Stock of the day today. Financials have been a group to watch, and the banks in particular, along with insurance, have been doing well. So Zion's Bank, coming from the Banks and Thrifts Industry Group, closed at 48.83, down 37 basis points yesterday. Zion's has a very bullish Chaikin Power Gauge rating due to very attractive financial metrics, very strong earnings performance, but there is a little bit of negative expert activity. That being said, when we take the 20 factors that fall into each of these groups, each of these 4 groups has 5 factors within. They roll up to give us the power gauge rating. it comes out as very bullish. Now, very bullish stock, strong trend, strong industry group, type of name we want to consider on the long side. Market and model are now in agreement. You can see the stock was pretty much neutral from June until mid-January, where it turned to this bullish or very bullish rating and began to outperform the market at that time. Stock is oversold with bullish money flow, has retaken the long-term trend line, which is shifting from declining to flat. Now, there's a couple ways to play Zions here. I think it makes sense to get involved on the long side. If you are concerned about this resistance level here at $50, you can buy a breakout through resistance. Another way you can set it up is via the options market, less of a cash outlay initially. So I think Zions looks compelling. It's the type of name we want to own. It's oversold with bullish money flow above the trend line here. Has had a nice move. Breakout traders can key in on the 50 level because a break above 50 likely targets a move back up to the $56, $58 level. Regardless of how you want to set it up, Zions is definitely a name you want to be considering for long exposure. Sector tracker, the movement of the major sectors over the last 5 days, all remaining bullish. Comms, tech, and industrials, your top three. Materials, financials, and healthcare, your bottom three. Still just a lot of rotation going on. I think materials are a group to watch for a bearish reversal as that group remains weak from a power bar perspective, and as some of the bearish and very bearish names within that group become overbought, I think it makes sense to kind of look for opportunities to get them out of the portfolio. Our industry in focus today. Yesterday, we looked at oil and gas services. Today, we're going to look at E&P, exploration and production. 4 bullish stocks, 33 bearish or very bearish stocks. And over the past 6 months, this subsector has underperformed the S&P 500 by over 20%. And the power bar ratio, which measures future potential, is very weak. 33 bulls, 4 bears. Earns it a rank of 20 of the 21 subsectors that we look at. Remember, services was actually the worst subsector yesterday at 21 of 21. E&P has moved down 1 slot over the past week. Some of the indicative, very bearish names within this industry group: Cosmos Energy, Devon, and WPX, all names to avoid. Let's take a look at Cosmos here, with the caveat being it is a $5 stock. Very bearish stock week, trend week industry group. Market and model are in agreement here. You can see the stock has been on that bearish rating since October. Slightly, shortly thereafter, stock began to underperform the market. And so the market and model are in agreement. Dynamic duo in gear here. Stock is approaching overbought. My one hang up is money flow here, as it has turned bullish, but we are below the declining long-term trend line. So at the very least, I know this is a name we want to avoid. The $5 stock might make it tough to open a position to the bearish side, but it's a great example of the type of name where you'd want to consider bearish opportunities as you're doing your research and your analysis. You can see there's some resistance here at the 550 level, declining long-term trend line, about to go into an overbought condition. Definitely don't want to be looking at KOS as a long idea. Want to be considering it for a source of funds if it is a name in your portfolio. So now what's trending? Yesterday's S&P 500 gainers and losers. Estee Lauder up 11.5% plus following their earnings announcement. Leggett & Platt, part of that supply chain to the home builders that's been showing some relative strength of late, up nearly 10%. Ralph Lauren up 8.4% following their earnings announcement. EA was up 4.5% yesterday, but it is getting hit hard here this morning. Following their earnings report last night. Stock is down 17% in the pre-market, and it's taking some of the other gamers down with it. Take-Two and Activision Blizzard in particular. Abiomed catching a little bit of a bounce after receiving a letter from the FDA the previous day. On the loser side of the board, Church & Dwight down 7.5%. This has been a market darling. Now turns bearish here, down 7.5% following their earnings. Archer Daniels down nearly 6% following their earnings announcement. Clorox 3.5% following their print. AMD down 3.4% following news that a large holder had cut their stake, and Gilead, their earnings report takes the stock down 3.4% on the day. Taking a look now at our earnings update. Tuesday surprises, Vertex beats by 28 cents. Anadarko missed. APC is a name that we've been bearish on here at Chaikin Analytics. They missed by 19 cents. Stock trading down 4% in the pre-market. Allstate, coming to us from that strong insurance group, beats by 23 cents. Walt Disney, a widely watched name, beats by 27 cents. And TransDigm beats by 42 cents, ticker symbol TDG. Before the open today, we're going to hear from bullish Cognizant and bullish Regeneron. After the close, bullish names, it is insurance utopia, if you will. A lot of key insurance names reporting after the bell today. Neutral stocks before the opening, GM, Boston Sci, and Humana are ones to watch after the close. O'Reilly and Fortinet. And then before the open, Take Two. Obviously, I'm going to be here listening for what they have to say on the heels of the disastrous report out of EA last night. After the close, Fox A and NOV. Chaikin does suggest caution when holding bearish stocks ahead of earnings. So now let's talk about that insurance group. It's a leading industry group. Of the 21 subsectors that we look at, insurance has been the top one or two for the past couple of weeks. Stock has had a nice rally here off the December lows. And notice, unlike the indexes, it has broken through the 200-day moving average. It's above the 50-day moving average. Nice move higher here for the RSI and solid bullish Chaikin money flow as we look at it. Obviously a lot of names reporting earnings here this week, but when we talk about leading stocks in leading industry groups, this is our top-down process. Number one of 21 subsectors, outperforming the market, showing good absolute and relative strength. So that's the type of industry where we want to look for bullish and very bullish stocks to add to the portfolio when they become oversold. So take a look at Aflac here, ticker symbol AFL. Very bullish stock, strong trend, strong industry group. So fishing in the right pond, if you will. Ribbon at the bottom of the screen shows us that the market and model are in agreement. Here's our very bullish rating. Stock's been outperforming since November. Stock is oversold, and money flow is turning bullish. Reported earnings last week. It's above a rising long-term trend line. Have a breakout here at the 47.5, 47.75 level. I think you want to be long Aflac. Have some support at $47. Set your stop at $46. Long Aflac for a continued trend higher with a stop at the $46 level. Very interesting name. Very bullish stock. Strong trend. Strong industry group in outperforming the market in a leading industry group within the financial sector, which has also shown some relative strength of late. That's the process. That's how we walk through it. Sentiment, on the other hand, is moving further toward greed. This is the 13-period moving average of the CBOE put-call ratio. And we look at this to get a gauge of sentiment. Are investors flocking to puts because they think the market's going to go lower? Or are they bidding up calls and favoring calls because they think the market's going to go higher? This is actually a contra-indicator. Usually when it ticks over 1.1, that has been pretty reliable at marking tradable bottoms in the market. You can see it happened here in December. It happened back here in the October timeframe where we had a quick rally. Back in 2015, the initial sell-off was met with a spike. We got a rally. Sell-off met with a spike. Also led to a rally. So, really we look at this for sentiment, and as it declines, we can say that sentiment is moving more towards greed. With that as well, the VIX has come in to under 16. If you look at the CNN Fear and Greed Index, that's now in a position of greed. Back in December, it was an extreme fear. So quite a turnaround in sentiment here as the market has moved higher. So that's it for today. You can get daily stock ideas for free. Sign up for our Power Feed email. Head over to chaikinanalytics.com/today. You'll be able to follow along with this show. It hits your inbox every day that the market is open before the market trading gets underway. Have a great day, everyone. I'll see you tomorrow.